Morning everybody. Thank you for coming today. I'm Kerry Underhill, Head of Communications here at Fonterra. I have with me today our Chairman, John Wilson, our CEO, Teo Sperrings, and our new CFO, Lucas Paravicini. We're here to talk about our full year results, which we announced earlier this morning. I'd like to now hand over to the Chairman. John.
Thank you, Kerry, and a very warm welcome to everybody that's here. And I'd also like to, as Kerry's just said, extend a very warm welcome to Lucas, who has joined the management team of our cooperative. Look, first of all, I'll just cover off our announcement that we made last night. So last night we announced that we had lifted our milk price to our farmers by 50 cents, a significant lift up to $8.30, which is just great news for our farmers and frankly for this country. We've also held the dividend announcement at this stage, forecast dividend. It is very early in the season, that's staying at 32 cents. So that's a total lift for our forecast cash payout to a 100% shared up farmer for the season we're in now of $8.62. Teo will probably touch on this later on, but the reality is that it's still very early in the season. It is a reflection of the volatility that we've got right now. Certainly $8.30 is our equal upside, equal downside view going forward, and we'll continue to update that as we proceed through the year. And Teo will talk about the reality of, with those high milk prices, the impact that that has on our earnings in the short term, but we will cover that off later on, but we're still forecasting at this stage that 32 cent dividend. So to the 2012-2013 year that we're in, just completed. So we have today, after yesterday's board meeting, been able to announce this morning a final farm gate milk price for the year that we've just completed of $5.84 and a final dividend of 32 cents, which gives us $6.16 return to a 100% shared up farmer. That is based on a net profit for the year of $736 million, which equates to a earnings per share of 44 cents. So, a very strong result for the year that we have just completed. And pleasingly for our cooperative, we've got a balance sheet of 39.6, so just under 40% debt to debt plus equity. And that is after we supported our farmers through the drought of last year with advance rates brought forward. So we're seeing the cooperative operating very well for our farmers. Next slide is just really a reflection of the movement over the last years. So $5.84, not a huge number for our farmers in the context of the last 4 or 5 years, but I think it's important to reflect on the last 12 months. This time last year, we were selling milk powder at $2,600 a tonne. So if you see the result where we've got to, we actually started at a $5.50 advance to our farmers. It dropped to $5.25 and we've been able to complete at $5.84 plus the earnings figure of 32 cents. It's just worth reflecting on that drought. It is the reality of farming. It is the reality for our cooperative. That second half of the year, that impact of the drought, that was 9% down on the previous year, which is just a dramatic number. That meant that the final number of 1.463 billion kilograms of milk solids was 2% down on the prior year. Just want to finally touch on our capital structure and the impact that trading amongst farmers has had. Now, we had a significant discussion for 3 or 4 years in our cooperative as to moving to what we call trading amongst farmers and having permanent capital on the balance sheet of our cooperative. We've been able to see since the launch, which was very successful at 30th of November last year, we've really seen that decision that we made in moving to trading amongst farmers come through so successfully. Significant drought in the second half of the year would normally have seen a significant amount of capital actually leave the balance sheet of our cooperative, and of course that did not occur. On top of that, we've been able to add far more flexibility for our farmers and how they operate within our cooperative than we've ever been able to have before, and you will see more of that as we go forward over the next 12 to 24 months. Had a bonus issue, a 1 to 40 bonus issue, which in effect is really another 17 cents a kilogram of milk solids that's available to our farmers if they decide to sell that share. And lastly, a very successful supply offer where 20% of our farmers were able to participate, again adding far more flexibility to our farmers' businesses as well as to Fonterra. So all in all, we're very happy with how the capital structure is working. It's certainly made a big difference to our farmers' businesses, and it's put a lot more stability into Fonterra and the way that we can set about executing strategy and deal with volatility in our business.